Hi, I'm Victor, and in this video, I'm going to cover Big Five Sporting Goods. Big Five Sporting Goods is a discount retailer predominantly on the West Coast. I've known of them for a long time, and they're a small company that kind of flew under the radar, but I started buying into them about 3 years ago. They're a small player, but just they pack such a big punch. They generate great free cash flows. They return a lot of capital to investors in the form of dividends, and they've been buying back shares. If you're unfamiliar with Big Five, they sell running shoes, camping equipment, sports equipment. So if you play softball, baseball, football, you can go get your cleats and your equipment from Big Five. You can also get apparel. They have brands like Columbia, Nike, Adidas, really nice brands. And if you fish, hunt, or camp, Big Five is a great place to go and get your gear. Last is if you have a home gym or want, workout equipment, Big Five is your place. They have a really nice selection of gym equipment. So that's Big Five as a business. Let me tell you more about where their stock's been trading and a valuation I have on this company. So if you owned Big Five over the last 5 years, you would have made 7%. Nothing really great. And they're down in aftermarket hours. So you may be back to even. They've also had a lot of volatility over the last year. Let's take a look at the last year's performance now. As you can tell, if you've owned Big Five for 1 year, you're down 16%. And at one point, it really popped in the late 2021 timeframe. There was a short squeeze. And I've owned the stock for 3 years, but I sold my entire position when it went up to above $40 a share. And I was able to cash out, made a very good gain on Big Five. And then I came back once it settled down. So I'm looking for potentially that to happen again. This stock has 40% short ownership, but the company makes money, makes great free cash flow, has no long-term debt. So it has a very strong balance sheet, and they can operate, for the next 20 years without ever getting into any trouble financially. So I really like my position. Oh, and by the way, they pay over 6% dividend. So I really liked Big Five as a small company that can really give me great return. So the valuation of Big Five, it's a big discount number. I think they're discounted by 226%. Let me explain why. I'm using a relatively high discount rate, even though their balance sheet, they're very strong balance sheet. They have no long-term debt. They produce great free cash flows. They're profitable. They really know this business. I'm using a very modest growth rate of 2% over time for the next 20 years. I used their last full year free cash flow, and they'll likely hit that number this year. And if we use that number and expect that free cash flow over the next 20 years, the net present value of those free cash flows is $1.1 billion, but the market cap's only $339 million. So it just offers up a huge discount on this stock. My intrinsic value per share is $51 per share, but the stock price is trading roughly at around $16 a share. So there's a really big upside potential in this stock. One of the things I like about Big Five is their management team has been with the company for a long time. These veterans really know the discount retail space. So I believe that's a huge asset for this company. They've grown over the last 2 years. They have really grown their free cash flows. Just free cash flows are excellent with this company. They've returned $69 million of value through dividends and stock repurchases. Let me remind you, that was in 2021. The market cap is $339 million, and they returned $69 million. That's exceptional. Their free cash flow yield is 30% on this stock. So just a lot of good things about this company. Really strong balance sheet. Their cash balance is $62 million. So all those things to me make me want to buy even more shares of Big Five because it's a strong company that is really undervalued. They expected in 2022, because of COVID, there was a huge spike in demand in 2021. So they expected sales to go down 11%, which they guided for and came in within the guidance. Actually, were favorable to the guidance in their Q1. I think the market's overreacting to that drop. Again, they guided for it. They told everybody it's going to happen. I continue to believe that high inflation is going to benefit this retailer because as inflation goes up, I think consumer preferences change. Instead of going to the mall and paying $200 for a pair of sneakers, you'll go to a Big Five and get a really nice pair for $40, $50. I think you'll be looking for a discount retailer as inflation goes up and your discretionary income, you have to really stretch it. So I continue to believe that in 2022. In 2022, they have committed to continuing to pay that really high dividend of 6.3%, and they can more than afford that dividend. My outlook is they're going to continue to have profits and free cash flows in 2022, 2023. There's 40% of the shares are being shorted, which makes it interesting. If there's any kind of rally in Big Five, it could really become a short squeeze again. And there we are again, ringing the cash register and making a good amount of gain very quickly in this stock. The downside, they have a strong balance sheet. They keep operating their business, making money, making free cash flow, paying a dividend. I don't see a whole lot of downside on this stock. So this video is for entertainment purposes only. I'm not recommending that you buy Big Five or any other stock or security. I record videos just to talk about how I invest in companies. In this case, I invest in Big Five, and I hope you found it interesting. Thank you for watching my video. Really appreciate it. Hope you found it interesting. Do me a favor and hit that like button. Consider subscribing and hit the bell if you want to be notified when I create another video. Thanks again for watching, and good luck investing in 2022.